Imagine turning a single dollar into 100, 1,000, or even 1,000,000. Sounds like a dream, right? But for some, it's a reality. What's their secret sauce? Stick around to find out. Today, we're talking about how billionaires and regular people like us invest in the stock market. You might think billionaires just have more money to play with, but it's more complicated. They also use special strategies to grow their wealth. Regular investors, who usually have less money, also have their own ways of trying to make a profit. We're going to look at what makes each group's approach different. This will help us understand how investing works, whether you have a lot of money or just a little. Warren Buffett once said, "The stock market is designed to transfer money from the active to the patient." By the end of this video, you'll understand the key differences between how billionaires and retail investors approach the stock market. We'll look at their strategies, the pros and cons of each approach, and even explore whether retail investors can adopt some of the tactics used by billionaires. Who are retail investors? Retail investors are individual people who buy and sell stocks, bonds, or other financial assets. Some also opt for real estate or even cryptocurrencies. Unlike big investment firms or super-rich individuals, they're usually managing their own money and not investing for anyone else. They often have less money to invest and less access to high-level financial advice. According to Pew Research, about 14% of U.S. adults are directly invested in individual stocks. Retail investors often rely on their own research or tips from social media or friends. They might be motivated by the desire to make quick gains, or they might be investing for long-term goals like retirement or buying a home. The emotional aspect of a winning investment and the lows of a losing one strongly influence their decisions. Who are billionaire investors? Billionaire investors are individuals or entities with a net worth of at least $1 billion. Unlike retail investors, they often have a team of financial advisors and access to more exclusive investment opportunities. Their financial clout allows them to influence markets and even set trends. Billionaire investors often have a diverse portfolio that goes beyond stocks and bonds. They invest in a range of assets, from real estate and private companies to commodities like gold and oil. Some even invest in art and rare collectibles as a way to diversify their holdings. Ray Dalio, a well-known billionaire investor, once said, "Diversifying well is the most important thing you need to do in order to invest well." According to Forbes, a significant number of the world's billionaires, around 55%, have made their fortunes through smart investing. Difference between retail investors and billionaire investors. One of the main differences between billionaires and retail investors is how much risk they're willing to take. Billionaires often have the financial cushion to absorb losses, which allows them to take bigger risks for potentially bigger rewards. Retail investors with less money to spare usually prefer safer bets, aiming to steadily grow their savings over time. Billionaires often have a long-term view, holding onto investments for several years or even decades. Retail investors, on the other hand, might be looking for quicker returns and may buy and sell more frequently. Billionaires usually have a team of experts and access to high-quality research, giving them an edge in making informed decisions. Retail investors often rely on public information, which might not be as detailed or timely. According to Bloomberg, the average return on investment for billionaires is significantly higher than for retail investors. For example, the top 20 billionaire investors have seen an average annual return of around 22% over the past decade, while the average retail investor has seen returns closer to 9%. Strategies used by billionaires. Billionaire investors often focus on the long game. Instead of looking for quick profits, they invest in assets they believe will grow in value over many years. They buy shares of a company and then hold on to them for a very long time. They don't sell them just because the market is having a bad day. This is called a buy and hold strategy, and it's how many billionaires have made a lot of their money. They don't just focus on one type of investment or put all their money into a single company. Instead, they spread their money across various sectors like technology, healthcare, and energy. They also invest in different countries to take advantage of global market trends. This strategy is more than just about reducing risk. It's also about maximizing opportunities for gains. This way, if one thing doesn't make money, the other things might still do well. This is known as spreading their bets, or diversifying. Sir John Templeton, a very successful investor, once said, "The four most dangerous words in investing are, 'This time it's different.'" This means that even though the world changes, the basics of making good investments don't change much. Strategies used by retail investors. Retail investors have different ways of trying to make money in the stock market. Some like to buy and sell stocks really quickly, all on the same day, hoping to cash in on small price changes. This is known as day trading. Others take a slower approach by putting their money into index funds or ETFs, which are like big collections of different stocks. This way, they're not putting all their eggs in one basket, making it a bit safer. Another trend is following what's popular on social media or online forums. Some stocks get a lot of buzz online and become meme stocks. Investing in these can be a bit like riding a roller coaster because their prices can change fast. According to the SEC, around 14% of retail investors are into day trading, showing that while it's not super common, it's still a notable way people try to make money. Can retail investors adopt billionaire strategies? While billionaires can afford to hold on to investments for years, retail investors might need to be more flexible due to financial constraints. However, the principle of buying quality assets and holding on to them can still apply. There are real-world examples of retail investors successfully adopting long-term and diversified investment strategies. Blogs and online forums are filled with stories of people who started with a small sum and grew it significantly by following sound investment principles. Peter Lynch, a highly respected investor, once said, "Know what you own and know why you own it." This advice is crucial for any investor. Understanding your investments and the reason behind them can go a long way in achieving financial success. Pros and cons. Both billionaire and retail investors have their own sets of advantages and disadvantages. Billionaires have the benefit of large financial resources and expert advice, but their large-scale investments can be complex and require careful management. Retail investors have the advantage of agility. They can quickly move in and out of investments. However, they often lack the in-depth research and advisory teams that billionaires have. According to JP Morgan, the long-term annualized returns for billionaire investors tend to be more stable and higher compared to retail investors, further emphasizing the sustainability of a long-term, diversified approach. Whether you're a billionaire with a team of financial experts or a regular person trying to grow your savings, the stock market offers opportunities and challenges for everyone. The key is to find a strategy that suits your needs and stick with it. Ride the wealth-wise wave with us. Stay tuned for more financial wisdom, investment insights, and business brilliance. Don't forget to surf that subscribe button, catch the notification bell, and ride the wave to financial freedom. Until next time, stay wealth-wise.